Welcome to a very special edition of Let's Talk Bitcoin. My name is Jason King, and I'm very excited here. I'm here in Miami right before the North American Bitcoin Conference. And what we've got in store this evening is we're going to have hopefully a very spirited discussion on what I'm going to call DAx, which would be Distributed Autonomous Whatever. If you want to be Distributed Autonomous Applications, Distributed Autonomous Corporations, Organizations, Distributed Autonomous fill in the blank. We happen to be joined here by three people sort of doing the most exciting things right now, or at least some of the most exciting things in this space. I'm very, very privileged to be joined with you guys and to get to talk to you. So we're just going to kind of go down the line and have you just introduce yourself, just name and company right now, if you will, and we'll start at the end.
My name's Daniel Larimer. I'm CEO of Invictus Innovations.
All right.
David Johnston. I serve as the executive director for the BitAngels, and I sit on the board of the MasterCoin Foundation.
I'm Charles Hoskinson. I'm the director of the Bitcoin Education Project and a core developer on the Ethereum project.
All right. So these are our three wonderful guest speakers here tonight. So what I'm going to do is I'm going to go down the line, and I'm going to give you guys each 3 minutes to describe to me what your project is, sort of what you think of the core value proposition is. And then once everybody's gotten a chance to introduce themselves, we're going to go in and do some actual more in-depth speaking about DAs as a whole. Okay?
All right. The project I'm working on is called BitShares. And BitShares is a very broad concept. It's the concept that instead of looking at a blockchain as a currency, we look at it as shares in a decentralized autonomous company. And that changes everything about how you actually design and build these decentralized systems. Like all companies, you need to focus on doing two things: maximizing revenue, minimizing expenses. And to that extent, everything we're doing is eliminating mining from the equation to minimize expenses. And then the transaction fees are the revenue in our system. So we want to maximize the incentive for there to be transactions and the value provided by executing transactions in our decentralized businesses. Our flagship business is what we're calling BitShares X. It's a bank and exchange, and it will allow you to earn 5% or more on anything, whether it's gold, silver, Bitcoin, Mastercoin, or Ether. So that is, in a nutshell, what we are doing, and we're very excited about the potential for using the BitShares concept in every different industry, from smart property to banking to insurance to gambling, voting, you name it. There's all kinds of applications that can be developed using that model.
Thank you very much. David, you want to go?
Sure. So the Master Protocol is basically a protocol built on top of Bitcoin. I think JR used a really good analogy in his original paper about thinking of Bitcoin as TCP/IP and thinking of this Master Protocol as HTTP, meaning that Bitcoin gives us a lot of things automatically. It gives us a timestamping service. It gives us a universal token system. It gives us this back end that solves a lot of these basic cryptographic problems. And like Dan was mentioning, if you've got an application where you don't necessarily need mining power, say smart property, or you want to issue digital tokens to keep track of some asset, then you don't necessarily need your own blockchain. What you need is these back-end services. And so the goal with the Master Protocol is to create these features that let people easily do this on top of Bitcoin. The first couple of features that are really important to emphasize are, number one, the distributed exchange that lets you trade Mastercoin for Bitcoin for any user-generated token that people create on top. And the thing I would emphasize is this is a big debate in the community. What's the right approach? Should we build this on top of Bitcoin? Should we build something else as a blockchain? The approach with the Master Protocol is to build on top of Bitcoin, and this is really possible now thanks to a recent update to the Bitcoin core client described by Gavin in his update number 5 that talks about provably prunable outputs. But without getting into the tech, it makes it easy for you to encode this metadata on top of the Bitcoin ledger. So that's the approach for the Master Protocol.
All right, great. Charles?
So to understand what we're doing with the Ethereum project, it's really useful to think about the history of Bitcoin and where we started. So when we started, there were 3 things you could do, and Satoshi Nakamoto decided to test 2 of them at the same time because he thought there's a wonderful marriage there. So the first thing he thought about was a decentralized database. This idea, let's put something into a ledger that is immutable, and that we can't take out, that is completely transparent and everybody has a copy of. So let's do that first. Second, let's create a transaction system that allows people to move value between parties without any intermediaries, no third-party interaction. And that's a really big piece of stuff to bite off if you think about it, because at the time it had no economic value. There was a lot of code that had to be written. The concepts were completely untested. But there's a third thing that Satoshi could have done, which is having a robust scripting system. This general notion of saying, hey, you can, instead of just sending transactions, you can go ahead and send anything you want. You can have contracts. You have Spark property. That's a wonderful thing to propose, but there's some security implications because it requires Turing completeness in the language, and also there's implications with things like blockchain bloat and so forth. And so Satoshi took a step back and he said, all right, I'm going to focus on the core experiment. I don't want to spoil it. And at some point, we'll later revisit this topic after we've built a sizable ecosystem that has economic value. So it's been 5 years. There's been a tremendous amount of innovation. The market cap hit $10 billion. There's tons of companies all across the world. There's some wonderful entrepreneurs in the space who are doing great things. And so now people are saying, let's go back to that. Let's go ahead and find a way to put that Turing completeness back into the system. So there's a lot of ways you can do that. One way is to lay it on top of Bitcoin, which requires you to change Bitcoin and do some things. It's a time-consuming process, and I really respect the amount of effort Mastercoin's put in. JR and these other guys have done some absolutely amazing work. Another option is to take the BitShares approach and create your own blockchain, your own paradigm. But really, what we see in the ecosystem is a lot of isolation, a lot of fragmentation, and a lot of cost of innovation. Whenever you want to do something, it costs $500,000. You have to put a team together. It takes months, if not years. There's a lot of testing. And so those are usually the symptoms of a disease. And the disease is you don't have a proper foundation to go ahead and do this. So the general concept, the notion of Ethereum is to say, throw away all the features. We don't want to release something with features, but rather let's just have a beautiful foundation that has a Turing-complete scripting language, that has this idea of a contract, a fundamental computational unit, and then let's go ahead and give that to people like you give a programming language to somebody, and let's use that to go ahead and enable people like Mastercoin, Colorcoin, BitShares with DAx to build anything that they want. The second part of that project is a kind of a social contract to have a very strong user experience. So you can't just go ahead and build some protocol that has elegant and beautiful code. Gavin's been writing amazing code back there. You have to actually have a foundation that everyday people can use and everyday people can develop for, just like the Android experience. So the second part of the project is to build a base foundation so that when we've launched for mining, it's like a large catalog, and it's one-click installation for everything. One-click installation for BitMessage, one-click installation for Open Transactions, who's a partner of ours, one-click installation for Ripple, and basically anything that you want, a wallet. It's one-click installation. And if you want to build apps for this catalog to have the same application development experience that people have with iOS or with Android. So these two things together, this beautiful foundation that's featureless and Turing complete, which removes the isolation, the fragmentation, and reduces the cost of innovation, plus a really nice user experience, I think it's going to give us at least a proper direction for a base foundation for the cryptocurrency space.
All right, let me jump in here. Okay, so in all three of your descriptions, and thank you guys very much for doing that, I think that we kind of went high level on what you guys are speaking of, right? So why don't we pretend in this audience that you need to explain what the value proposition is of DAs in general, okay, to people like they have no idea what you're talking about. I like Andreas Antonopoulos has this great thing, and you guys mentioned the TCP/IP HTTP thing. I think that's a great analogy. But he said that Bitcoin technology currency is the first app, and it's everything that's coming after that that's really going to be the game changers for everything. And you guys are definitely working in this space. So why don't we back it up out of your individual projects, and let's just talk generally about DAs as a whole. And I would just like to hear your thoughts on what you think sort of the next killer apps that are coming out for this are, and why you think there's value to them in the system.
Yeah, I'll start. Generally speaking, it's a better idea to look at what's been done in society and an ecosystem first and say, what can these do to improve what's been done instead of what's the revolutionary feature? Because it's hard to know ahead of time like what's going to be important. I don't think very many people would have predicted Twitter. So what's been done is we have organizations like WikiLeaks, like Wikipedia, like ICANN that serve basically a public good or a public utility style format, but yet they're constrained by a jurisdiction. So where this technology is going all of our approaches in some way can enable an idea of taking these organizations and removing them from whatever jurisdiction they live in and uplifting them into the cloud, uplifting them into the internet, and taking the rules that constrain them and put those rules into algorithms instead of people.
Okay, so focus that down for me. Like, give me an example of like one use case for that where it would have like a wonderful effect on the world if someone were to take that.
Oh, WikiLeaks is a great example. So if you can uplift WikiLeaks and put it into the cloud, then you functionally can't shut it down. All the services, utility, the financials, they're all transparent. They live in a blockchain, and there's no central point of failure. So that's an example. Other things that you probably don't want to have geographic bias, like ICANN. It's based in America. America has tremendous influence over the management and operations of ICANN. You can uplift that, put it into the cloud, and define the rules, parameters, the voting system in a free and fair way that can't be coerced retroactively. So those are tangible examples for nonprofit style organizations. But there's also great examples. We were just talking with a guy from Cuba. He runs the Bitcoin Miami meetup. And his parents are from Cuba, and he lived there for a while. And Cuba has this terrible situation where most commerce is controlled by the government. And it's similar with China. There's a lot of gray area businesses because if you want to actually do business, you have to be an insider. So you have two options right now if you're an entrepreneur in a developing nation. The first option is to be cozy with a politician and get the bribes done, or the other option is to go off the books. And that's no good for anybody. So when you have this idea of a decentralized autonomous organization, you now have a third option. Once all the tools are there and the user experience is correct, you could very quickly create an organization that outsources the trust of the operation of the business and makes the business transparent, but removes it out of the jurisdiction of the country that's not favorable. So I think this is going to be a godsend for a lot of developing nations.
Sure. And I would definitely echo that. I think you're right about what Bitcoin accomplished was it created this open source program that couldn't be globally censored, meaning that you had enough copies out there in the ecosystem that people could adapt it to their particular jurisdiction. And so people building an exchange in the U.S. could take a different approach than people building an exchange in China, et cetera, et cetera. But the core protocol wouldn't be shut down because it was distributed. And so for me, the next thing that I want is a distributed exchange. And so this is the very first feature that I see as the next killer app, because this is already a problem in the ecosystem. We've had Bitfunder
for a while. Yeah,
for a long time, right? Bitfunder has closed, BTCT is closed, right? All these different central approaches to, I want to buy some tokens in this particular application or in this particular project have closed down, because how do you do regulation globally, right? It's really, really tough, right? Because everywhere has different rules. And that's a problem as long as you have a central server. Now, imagine you don't have a central server and it's all P2P. It's all person-to-person exchange of these tokens. That's partly why the Master Protocol started focusing on that first, is because it's been a huge problem for the community. I think that's why a lot of people are excited about that particular killer app.
I like to talk about that particular killer app because that's our primary killer app in BitShares X. I mentioned earlier that you could earn 5% or more on anything. I like to step back and look at what viewing a blockchain and the shares allocated in the blockchain as a company allows you to do. We can actually create dollars the same way that your bank currently creates dollars. It lends them into existence on collateral. You can do that on a blockchain where the blockchain controls the collateral. So whenever you borrow money from a bank, you expect to pay interest. And whenever you lend money to a bank, have a deposit at the bank, you're lending the bank money, you expect to receive interest. Using a blockchain, we can completely cut out the middleman, which allows you to receive a 5% return on your dollars. If you can lend dollars into existence, you can lend gold, silver, oil, anything, Bitcoin or Mastercoin, can be lent into existence on a blockchain using the exact same business model. Unlike a bank, which normally lends on your house, this is lending on stock in the bank. It'd be like going to Bank of America. I'd like to borrow $100,000. I got $200,000 worth of your stock. You get a loan.
Okay, so I'm already a little bit confused on it.
Yeah.
Let's go into the next part here. Why don't you describe to me sort of exactly how BitShares is going to implement that in a way so that we can all sort of grasp that concept.
With BitShares, you use it just like you would a Bitcoin wallet or online banking. exact same user experience. You say, I want to send dollars to someone, you send dollars to someone. I want to send ounces of gold to someone, you can send ounces of gold. This is the value of an ounce of gold, not actual ounces of gold. These are not debts that cannot be defaulted on because they're backed by the blockchain, which can do margin calls just like a bank would. So the user experience of this is like Bitcoin, except we're combining it with another product we have, Coyote, which eliminates the need to use Bitcoin addresses. And that's an identity management application for the blockchain technology, global consensus on who owns what name. So from a banking perspective, it works just like a bank. Now, we can use the same business model to implement other types of businesses. So if you have a company, a very traditional company that's doing a lottery, it sells lottery tickets, puts the money in a pot, draws a number every now and then you have a winner. Very traditional business model, makes millions or billions every single year. You can implement that on a blockchain. The characteristic of everything we're doing is that we view the blockchain as shares. We pay dividends to the shareholders, so we try to maximize the value proposition to the shareholders of the blockchain, and we try to minimize the expenses.
Okay, so this is the part I think I'm getting confused on. So in a bank, I can go and I put cash into the bank, and I have handed over physical control of my cash. And yes, they can now make representations of that dollars and lend them out however they want to. So in your example of gold or oil, say I've got 1,000 barrels of oil, and I want to implement them in BitShares. Like, how does that transaction take place?
Well, first of all, the system works even if you don't have 1,000 barrels of oil. All you need is, like if you have Bitcoin and you want to sell some, I want to bet on whether or not Bitcoin, gold is going to go up or down relative to Bitcoin. So you both put 100 Bitcoins into a pot, and when the price moves one direction or the other, eventually you make or lose money proportional to the price movement. So you get the purchasing power of a barrel of oil or ounce of gold without actually depositing an ounce of gold. But what it allows you to do is a system like local Bitcoins. The problem with local Bitcoins is that you're trying to simultaneously match a bid, an ask, and a location. We match all the bids and asks on the blockchain automatically. And so you have a bid asset like BitUSD. Now all you have to do is match location. You no longer have the huge spread that you have in the centralized exchanges. So you can meet someone on Craigslist and swap $100 for 100 BitUSD. And the price will fluctuate right around $1. And it protects you. It's a way of hedging. And all this can be implemented on blockchain, complete with other features that day traders like, the ability to do options. And the full trading environment can be done on a blockchain. Other applications you can implement on a blockchain would be auctions. You can put an end to domain name squatting by auctioning off the names. Now, what's different about our approach is that we view all the names as belonging to the shareholders, and they want to maximize the value they get for selling their names. And we don't want to have people buy a name and squat on it. We want to auction it off just in time. And so that's another way that you can implement something on a blockchain, where everyone doesn't want to own a name, they want to own all the names. And so the names can get allocated to the most efficient application. The core thing that I want everyone to take away from all this is that you have to view blockchains and decentralized applications from a business perspective, from an economic perspective. If you take the $1 billion a year that Bitcoin is currently spending to mine and secure their network, and you were to apply that to development of decentralized applications, think of the good things that could happen. Bitcoin as a business model is growing only so long as new capital is funneling into Bitcoin. It's being diluted at 12% a year right now, paid to new miners. And in the future, 100% of all revenue, the transaction fees, are being paid for security. But if you can turn the Bitcoin model into something that's profitable, where 100% of the revenue goes to the shareholders as dividends, you eliminate the need to dilute the shareholders, you increase the value proposition. It's a self-sustaining system.
The BitGive Foundation is a nonprofit charitable giving organization leveraging the power of the Bitcoin community to improve public health and the environment worldwide. Help us demonstrate the significant impact of Bitcoin in addressing these critical issues on a global scale. Support international giving in Bitcoin. please visit our website at www.bitgivefoundation.org. That's www.bitgivefoundation.org.
CryptoKit is the world's first Chrome browser Bitcoin wallet. It's the easiest, fastest Bitcoin wallet payment system. With a simple one-click install, it takes just seconds to get your wallet set up. And because CryptoKit finds the address and payment for you, there's no more fussing around or tab switching. CryptoKit is more than just a wallet. It comes with a preloaded PGP encrypted social network, news feeds from Reddit and Google, and up-to-date charts from exchanges. Finally, CryptoKit Directory allows you to make two-click payments with any of the BitPay merchants. Once you install CryptoKit, you won't need anything else. For more information or to download CryptoKit, visit CryptoKit.com.
Let me jump in here, and I think it's a good jumping off point for something I'd like to talk about here. Because you're talking about profit, you're talking about revenue, you're talking about development expenses, and so you guys are all working on sort of next generation of blockchain technology. So the successor to Bitcoin in terms of functionality here.
Now, to say the augmenter.
The augmenter. Okay, yeah, that works for me. But so and I'm just going to preface with this is that you guys are all doing fundraising of some sort, okay? And I think we can all agree that Satoshi Nakamoto didn't really have to do this because none of us knew if blockchain technology was going to work, right? So it's like he had the luxury of being laughed at for a while and being able to mine on its own, and sort of it developed naturally, right? But we all can agree the blockchains work now. We at least have this one killer app, Bitcoin, on it. So it's my understanding that you guys all now believe that you can't pull value from these projects that you're releasing just by releasing them openly, that you need to have some model up front to fundraise for the development of your project, and you guys all have different ways of fundraising. Mm-hmm. So let's just talk about fundraising right now. Let's just start. We'll just go down the line again. We'll start with Charles, and we'll talk about how you guys plan on funding your model. Okay, cool. Go for it.
Yeah, we looked at this for quite some time. There's certainly a lot of different economic models that can be embraced. So there's a kind of this, let's just start mining and try to acquire some of it and sell it when the market's high style funding model, which in practice doesn't actually work terribly well. And then there's the 100% pre-mine model where you sell out, and there's something to be said about that model for bootstrapping an ecosystem, but not necessarily for long-term durability. So we took a step back and we said, well, how has fundraising been done over the last 50, 60 years in general? And if you look at Silicon Valley, you look at venture capital, generally speaking, you have some founders. They initially have a large amount of control over the company, the ecosystem, and then they give a slice to it to the people who initially invest. And then over time, the investors and the founders divest. So what we did is said we want equatability in our money. We want a large distribution of our money, and we don't have a situation where one person owns 10 or 15% of the currency base, which has implications across the board. So let's go ahead and embrace first a persistent linear inflation model where we create a fixed amount of coin per block indefinitely. So over time, your inflation rate decreases, but you have a linear increase in supply. So all the sins of the fundraiser, if one wants to call it that, disappear over a 5 or 10 year period. For the most part, 95% of the coins in distribution were mined. They were produced, and their opportunity to acquire coins year 10 or year 15 is the same as the opportunity to acquire coins year 1 or year 2. So we embrace that. We're going to go ahead and do an IPO style, fundraiser style, starting in February 1st. It's inspired by Mastercoin, which you guys did, which I think it's quite good, with a couple of modifications. We're going to run a 2-month fundraiser. We have a hard cap of 30,000 Bitcoin. So if we raise that much money, we'll stop, or 60 days.
if we just raise 30,000 Bitcoins.
If I say
NBD, guys.
But
no
guys, to be fair, it wasn't too long ago that we were buying pizzas for 10,000 Bitcoins. So in
Bitcoin time, that was a lifetime ago.
That was a lifetime ago.
I mean,
yeah.
seriously,
so,
it was.
Yeah. So basically, we have two options. Window A is 60 days. Window B is 30,000, and we'll have a full prospectus ready to go on February 1st with all the terms, conditions, and how the investment is going to work. And they should be available for liquidity, meaning you actually trade them and sell them when the Genesis block launches, which should be Q3 or Q4, depending upon how long it takes to vet our security model, amongst other considerations. But the important thing to take away from this is that the insiders, the founders of the organization, will have around 6-7% of the currency base year 5. Second, we have endowed an organization that will turn into a decentralized autonomous organization with enough reserves so that when the Bitcoin supply runs down, it can pay for long-term development of the ecosystem.
And so what's your time frame on actually, what do you plan on Ethereum actually becoming its own DAC?
Okay, that's a great question. So unfortunately, the infrastructure and technology to build a proper decentralized autonomous company, it's not quite where it needs to be yet, and especially not if you want to stick $25 million in it, right? You want a little bit of certainty behind this. So you have to do things the traditional way, at least now. But so what we're going to do is start an organization in a jurisdiction, most likely Canada, but it might be somewhere else. We're still in talks with lawyers about where the best place to do this is. And then we're going to be working with Kyle and a couple of other partners, and over a 12 to 24 month period, we're going to go ahead and convert that organization systematically, step by step, into a decentralized autonomous entity or organization. And we'll produce a documentary and a manual, and then we'll give it to the community and say, hey, pick Wikipedia, pick all these other guys, show them the merits of what we've been able to do here. In the meantime, we're very concerned about transparency. We have Anthony Diorio with us, and he's kind of set the gold standard for the Bitcoin Alliance of Canada. And so we're going to submit to quarterly audits by an independent accounting, and we'll also have in-house counsel and in-house accounting with the organization. So we feel it's the best balance that we can provide today, and it's something that's productive because we can partner with everybody who's interested in DAX about this process to build DAX.
Let me stop you here. We got off a little bit, and I know that I did it, but I want to talk about the fundraising model of these other two guys. But
Sure.
then I want to come back, and if I don't remember, remind me. I want to come back and I want to talk about jurisdiction on these, okay?
Absolutely.
Yeah. Okay, cool. So let's go. So MasterCoin, so you guys are already available. Like, you guys have already done some fundraising, right?
It's already out there in the market.
Okay,
That's exactly it.
so why don't you go through how that is, and then like how I would acquire MasterCoin today
Sure.
if I wanted to be involved with it.
So the question is, if you don't need mining, then how can you fairly distribute tokens? And the way that JR set it up was to create this almost Kickstarter-like 30-day period where anybody could send BTC to a particular address, the Genesis address, or the Exodus address is what he called it. And during that period...
That's funny.
Yeah. Yeah, the Exodus address. So anybody that sent, and this started August 1st and ended August 31st, 2013. Anybody that sent BTC to that address, and it was, publicly advertised, and, all the Bitcoin community, comes, if you believe in these features, if you want these new projects to succeed, send Bitcoin to this particular address. And that generated 100 Mastercoins for every one Bitcoin. So at the time, price of Bitcoin was about $100. And so it was essentially $1 per token for Mastercoins. And it created two pools. It said, okay, anybody that contributes, they're going to get this amount of tokens. And then we're going to create an additional pool on top for developers. It's called Developer MSC, and it's given out on a regular predictable basis based on an algorithm to developers every month that contribute to the open source implementation. And so these are the two pools. Okay, people that provided value and money to develop the stuff, and then a long-term pool of, okay, here are tokens for everybody that contributes over the years in the future to the further development. And so that's how you got both of these sets of tokens out there. And similar to what Charles is describing, is our goal is to have this done in a completely decentralized way. We don't want a foundation that has any control whatsoever over this process. And so what we said is, well, we certainly don't want it centralized around JR, so let's create a nonprofit foundation. Okay, the foundation will hold the funds and distribute them to developers. What we're implementing is a proof-of-stake system that lets everybody that holds Mastercoins vote on the new version of the protocol. And the second part is a distributed bounty system, so anybody can put up, we ought to code this next. And the community can decide based on consensus who should get the developer coins, what should be paid out, who should get role-based bounties. So all the things that the foundation is doing right now basically dissolve as it goes forward, and it's the same as Bitcoin, and the foundation has no more control over the protocol than, say, the Bitcoin Foundation.
So like the 51% attack on Mastercoin is just buying a shitload of Mastercoin, right?
You would have to buy 51%.
Okay,
it's similar
cool.
to proof-of-stake systems
Gotcha.
like Purecoin, which would be really expensive if you tried to buy all of them, right? You would drive up the price.
Hey, I'd be happy with that. For a while, yeah. No, that would be cool. Okay, let's move into BitShares.
Well, we actually have a hybrid model. We started with one model, and we pivoted to a Mastercoin style model with some changes. The initial model we had is what we're calling BitShares PTS. It was a new Bitcoin clone without any pre-mine that anyone could go and start mining. And that took off. We launched November 5th, and it's been wildly successful, reached 20 million plus market cap.
It hit 31.
Yeah. Briefly, yes.
For ProtoShare.
Yeah, that was also when Bitcoin was at 1,200. So it used to be ProtoShares. I'm calling it BitShares PTS now. And that was good. That allowed our community to go from nothing to, we got like 10,000 people, half in China, half in our forums at BitShares Talk. And probably many more that we don't even know about that are involved because they learned about ProtoShares. And what ProtoShares allow you to do is they get a stake up to at least 10% in every future decentralized business that we produce. And of course, we're trying to encourage others to do the same things to get the community support. But that actually didn't help us. What we realized from that is that mining, people spending $100,000 a day paying Amazon Cloud Service or their electric company to mine these ProtoShares. And all that money is just being burned up. It's ridiculous to destroy your seed money in the allocation of your shares. And that gave us the idea of, well, what if we could capture all the money that was being spent in mining, because people are spending this money anyway, and repurpose that to the development of decentralized businesses that actually give value to the ProtoShare holders. And that's where we came up with Angel Shares or BitShares AGS. Each and every day, you mine with your money instead of for your money. There's a fixed allocation of 5,000 for Bitcoin and 5,000 for ProtoShares or BitShares PTS holders. The more money that's contributed to the angel address, which is like your Exodus address, on a given day, sets the price. So there is an actual market operating on each and every day that's establishing the price. And it's got the same social contract as ProtoShares. 10%, at least 10% of everything we do in the future. With the initial BitShares X, our bank and exchange, you're going to get 50% going to ProtoShare holders, 50% going to the Angel Share holders. That has been wildly successful. Depending on the price of Bitcoin, we've probably raised $2 million in the month of January alone through this, in combination of ProtoShares and Angel Shares.
Cool. Okay, so what I wanted to come back to was jurisdiction. So first, I would like to just everyone just give me just a short answer of where you guys are based out of.
We really don't have a geographic location. I'm in Colorado.
But what I'm saying is your company's going to be formed, like you're going to be forming an organization in Canada, right?
The holding company that's managing the money. So the fiduciary entity most likely will be in Canada. We've looked at a couple of alternatives like Switzerland, for example.
Okay.
We really want to go to a place where the rule of law is strong and regulation is coherent.
Okay. And Mastercoin?
So same kind of deal. There are a lot of Mastercoin foundations all around the world. There's one in China. There's one in the United States. There's one in Israel. But the one that holds the original Exodus Address funds is a nonprofit incorporated out of Delaware.
Okay.
Invictus is a Virginia company.
Okay.
And we are looking to find the best jurisdiction, just like Ethereum.
And so why I asked that, right, is because I know like what you jumped into is we're based everywhere, right. But so we talk about all these wonderful things that distributed autonomous corporations, distributed autonomous organizations are going to create too. But just like with Bitcoin facilitating lots of evil, so-called, there's the ability in these things to also create some horrible shit. So like we jokingly talked about on the way over here of distributed autonomous assassinations. Like quadcopters with zip guns or small amounts of explosives that you just put in an address, pay some coins, and they fly.
I think the U.S.
and blow
government's
up.
on board now.
Yeah, exactly. So I mean, that's real things. I mean, I believe in if there's an exploit, like let's talk about the exploit now because the exploit's going to happen eventually, right? So one of the things that's going to happen is when someone utilizes one of your platforms for something terrible like this, because it'll happen, is that they're going to come after you. You know, someone's going to want someone to hang for it, right? And so that's sort of the difference. And we had a long talk last night about this, is that like Satoshi didn't have to deal with this, right? He just disappeared. You know, we can't go, oh, let's go get Satoshi, like he had damn Bitcoins, you know, like he's gone. Like we can't go do that. But like, you know, I can grab Charles and I can shake him real hard, you know, and do what all the stuff that U.S. governments, you know, does real well for it. So so go for it.
Yeah, well, let me address this one. A couple of things. First, as a foundation, what we've said is we're never going to get involved in any of the operations. So we're not going to run an exchange. We're not going to be a market maker. Any of that. We only and purely support the open source development. So that's step one. Step two, I believe everybody on this panel is a member of the new CODA organization, which if anybody hasn't heard of it, it's the Consortium of Decentralized Applications. And this is a legal entity we've created just to focus on these regulatory issues that you're bringing up and the legal issues. So they're creating basically papers on what's the legal view of this. They're talking to the regulatory agencies. And so we've taken some of our funds and put it aside specifically for that issue to get way ahead of it before 6 months from now, something like what you're describing.
Right. And so for 6 months, I think that probably makes sense. You know, I think that that's a good Band-Aid thing. But I think that ultimately, you know, the reason that your platforms all exist is because we all realize that we really need something that can't be stopped, that's jurisdictionless, you know, that doesn't exist in one jurisdiction and no one can actually have control over.
Well, lucky for us, our money doesn't sit in a jurisdiction. It's in Bitcoin.
This is Chris Joseph taking a minute to tell you about Next. Written from the ground up, Next is a 100% proof-of-stake, second-generation cryptocurrency. It's loaded with advanced features, but the one I want to tell you about today is Next's alternative to mining, which is called transparent forging. With it, Next can achieve instant transactions at a rate of more than 1,000 per second, as much as Visa. Next's proof-of-stake model eliminates the threat of hash power centralization, and the network is supported for a minimal energy cost. Best of all, Next is only 8 weeks old, but it is already supported by an incredible community. So please come and join us. Head on over to nextcrypto.org or mynxt.org, and stay tuned for more news on Next and the next Let's Talk Bitcoin broadcast.